Hey now, I'm back with another trading system review that has been proven extremely profitable over a series of 100 trades. And be sure to stick around to the end where I show you how to make this even better. But right now, just sit back, relax, and hit that subscribe button before the market hits you where the sun doesn't shine. I call this system the Hoochie Mama, and like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes 3 free TradingView indicators. As always, links and settings to all indicators are listed in the description below. The first indicator is actually a different type of candlestick called Heikin-Achi. I am going to keep the style at default. Heikin-Achi means average bar in Japanese and attempts to remove noise from the price chart. How Heikin-Achi candles are calculated is for another video, but it is important to know the closing level of the Heikin-Achi candle is not necessarily the actual price of the instrument. On this chart, you can see the same price presented as a traditional Japanese candlestick and a Heikin-Achi candlestick, with the closing level at significantly different price levels. Therefore, on this test, I am going to use the Heikin-Achi chart for signals and the standard candlestick chart for entries. This method will provide more accurate test results. The second and third indicators to place on the chart is the exponential moving average, or EMA. The first EMA will be set to 10 and colored in blue. The second EMA will be set to 30 and colored in orange. The 10 and 30 EMAs will work together to determine overall trend direction in addition to providing a precondition for entry. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the US dollar 1-hour Heikin-Achi candles on the top chart and 1-hour Japanese candlesticks on the bottom chart. The rules to enter along on the Hoochie Mama are: first, the 10 exponential moving average in blue must be over the 30 EMA in orange. Second, price must pull back into the 10 EMA. Finally, the price must close above the 10 EMA with a green Heikin-Achi candle. Our rules are met when this candle closes. That is our trigger candle. We enter on the standard Japanese candlestick chart, placing the stop below the previous swing low, and target is dynamic. We exit the trade when the first red Heikin-Achi candle closes while in profit. And in this case, the profit is 2 times risk. If you enjoy this content, make sure to click the like button. I have one more long example. The 10 EMA is over the 30 EMA. Then we can see that price pulls back into the EMA ribbon. Finally, price closes above the 10 EMA. Everything converges on these candles and it serves as our trigger. The stop is placed at the previous swing low and the target is dynamic. So you can see here we have some red Heikin-Achi candles close, but we are not in profit, so we leave the trade open. Finally, a red Heikin-Achi candle closes while in profit, specifically with a 1.31 risk to reward ratio. And now we flip to shorts. This is what I will test for shorts. First, the 10 exponential moving average in blue must be under the 30 EMA in orange. Then price must pull back into the 10 EMA. Finally, price must close below the 10 EMA with a red Heikin-Achi candle. All of that happens on this candle. That is our trigger. Enter on the standard Japanese candlestick chart, placing the stop above the previous swing high. The target is dynamic. Close the position when the first green Heikin-Achi candle closes while in profit. This example is booked with a profit of 3 1/3 times risk. I'm going to show you one more quick short example. The 10 EMA is under the 30 EMA, price pulls back into the EMAs, then a red Heikin-Achi candle closes below the 10 EMA. This is our trigger candle. Enter on the standard Japanese candlestick chart, placing the stop above the previous swing high with a dynamic profit target. The system rule to exit is met when the first green Heikin-Achi candle closes while in profit, and this example winds up with a solid 1.25 risk versus reward. I'm going to share with you my thoughts on how we can improve this system along with a Trader's Landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do extensive back and forward testing and be sure to let our community know what you discover. This test was done on Bitcoin versus the US dollar. It took just over 4 months to find the 100 setups. Most consecutive winners came in at 7, and there were 5 losing trades in a row. The win rate came in at 60% using the dynamic take profit method, and that was accompanied by a very nice profit factor of 2.42. Risking 2% per setup, the gain on account was over 100% gross. And I have some interesting ideas on how we can get these numbers even higher. So the equity curve here is quite interesting. The average risk to reward ratio, excluding losing trades, came in at an interesting 1.45, with the most profitable setup taken being 17 times risk. If we remove that huge trade, the average comes down to a 1.19 risk versus reward. This is extremely statistically significant and needs to be observed on a larger data set. I give this system a Trader's Landing score of 7. Because it has a good profit factor that portends a profitable system. Attempts to scalp going with ongoing trends. However, there are indications this system needs much more optimization. Before I get into the optimizations, if you want to support this channel and the work I am doing here, in addition to connecting with some like-minded traders, I encourage you to check out our community site where we are discussing all things trading. Remember, the enemy of great is good. I have 5 ideas on how we can improve this system. First, you can try a different way to enter that could potentially lower your win rate, yet increase your gain on account, which would be only to take entries when the EMAs cross over in the direction of the Heikin-Achi candle. Here, you can see these would have been very profitable entries because in theory, you are getting into the market at a better value. Additionally, you can change your stop loss level to a more distant point of invalidation. One of the advantages of the Heikin-Achi chart is the clarity it gives you in regards to important price levels. Making your stops further away and using a stop loss mitigation method can really increase your win rate if that is an important factor to you. Third, like in many systems I have tested, you can add on the 200 EMA for an additional trend confirmation, only taking trades when the 3 EMAs are stacked up in the direction of your trade. Fourth, you can use a different exit method to really increase your profits. Exiting on the reverse Heikin-Achi candle can be fickle. You may want to try an exit based on a super trend opposite signal. For example, if you are long, close the trade on a super trend sell signal. Not only is the potential for profits greater, but it is also easy to set an alert on TradingView to exit your position. In addition, you can filter out bad signals by adding a MACD crossover feature to the system. Specifically, you can test only taking signals when the MACD and signal line cross up below the 0 line and vice versa for short signals. Check out this playlist for more profitable systems and have a great day because you deserve it.